Owning a single rental doesn't just change your entire life, but it completely transforms your mindset, and today I am going to show you how. Imagine a new way of thinking about wealth. Not just growth that reaches up, but growth that digs deep. Real estate has been a wealth builder for centuries, but the real power comes in the mindset of growing your wealth down.
What? Grow your wealth down, Rob? I thought you're supposed to make it go up.
Yeah, I get it. Just stick with me and I'll explain to you exactly what this means. Once you really live by this philosophy, it completely rewires your brain, changing the way you think about real estate forever. See, real estate isn't just about cash flow and appreciation. Real estate is about building a financial foundation so strong that it sustains you through life. Let me show you how the right mindset can turn one rental into a powerful, resilient force. Because wealth that grows down is wealth that's built to last. In today's episode of Rob Built. Growing wealth down means you build a foundation so strong that it sustains your financial future, even when the markets shift and life throws you curveballs. See, the thing that I see a lot of investors focusing on is growing their wealth up through getting their cash flows up, driving up their net worth as much as possible. But real estate is unique because it builds deep roots. One of the key benefits to real estate, of course, is cash flow. We're in it because we want to make money every single month. And of course, there's the appreciation. How much does your property go up in value every single year? The more it goes up in value, the higher your net worth grows. And just these two things alone offer security. With real estate though, you're not just building a cash flow stream. You are growing a foundation of wealth that gets stronger with time. Now, in the world of investing, you have a lot of options. You can go the stock route, you can go the real estate route, but obviously I'm a real estate guy and I want to make the case as to why I think that real estate is the best vehicle. So think of it this way. If stocks are like a fruit bush with quick growing returns, then you can think of real estate as a fruit tree, growing taller, stronger, deeper year after year. It's steady and it grows little by little every single year. And when you really start to visualize real estate as a tree, you can kind of think of the height as the appreciation. It grows taller, it appreciates more. And the fruit is the cash flow. On the flip side, stocks are more like a fruit bush. They can grow tall, they can produce fruit. But the difference with real estate is that the real magic happens below the surface because of a small, beautiful little thing called debt paydown. And this concept is where the idea of growing your wealth down comes from. So let me explain what debt paydown is in very simple terms. You go and you buy a rental, you put a tenant in there, or in the case of Airbnb, a guest that pays you to stay in that property. You take that payment and you use it to pay off your mortgage, meaning that someone else paid the mortgage, therefore lowering the principal balance on the loan of that property. And every single mortgage payment that you make is like a root that goes deeper, strengthening the tree and its stability. But the effects of this are compounding because not only are you getting roots that go down deeper and deeper and deeper into the ground, but your property is also going up in value, going higher and higher and higher. And with each mortgage payment, you're reducing your debt, increasing your ownership and building equity in that property. And this is the really big, beautiful difference to me between stocks and real estate. With stocks, you go out and you buy them and you own them outright and they grow up in value, but there is no debt pay down there. With real estate and the power of leverage, you can go and get a mortgage on a $200,000, $300,000, $400,000, $500,000 property that will go up 2 or 3 times its value over the course of 30 years, and you will pay it down over the course of 30 years. And that debt pay down gives you more control over your wealth's foundation. As the roots grow down, so does the height of the tree, representing the oh so steady appreciation of your property. Appreciation happens naturally. When you buy a house and you own it for 30 years, it typically is going to be worth 2 to 3 times more than the purchase price you bought it for. It's steady, it's small, it's not huge differences that you're going to see every single year, but over the course of 5, 10, 15 years, you will see that difference. Think about it as looking at a tree. If you were to look at a tree every single year, you probably wouldn't notice that much of a difference. However, if you moved away and came back 10 years later, you'd probably notice that that tree is much larger. That's exactly how real estate is. It's a compounding 3% appreciation every single year. All right, so I just looked this up. It's actually a little bit more. The average appreciation since 1990, right, over the last 10, the average annual appreciation of real estate in the United States since 1990 has been around 4.4%. However, caveat here, the rate of appreciation has fluctuated significantly over time, with some years seeing double-digit growth, blah, 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 right? But overall, when you average it out, 4.4%. And that's kind of like the compounding interest that you see with stocks. Real estate is very similar in that capacity. Growing up, right? But it's way more powerful when you pair it with that debt pay down and growing those roots deeper. You can really start juicing your real estate when you start making strategic improvements. Force appreciation appreciation of your property by remodeling it, by adding square footage, therefore adding more value, helping the tree grow bigger and stronger. So with deeper roots and steady growth, your wealth isn't just surviving, but it's thriving. Okay, let's talk about cash flow, because I know to a lot of the people listening here, cash flow is king. I get it, I love it too. The interesting thing is people are just focused on the fruit. They're like, I want the fruit, let me eat the fruit, the cash flow. But what most investors fail to understand is that the fruit actually grows juicier over time. As debt shrinks and the tree matures, cash flow becomes richer, juicier, and better. See, one day, your mortgage is gonna be fully paid off. And when that day comes, the fruit is going to become a massive source of income for you. And this, my friends, is one of the unique, amazing benefits of real estate, the power to produce increasing cash flow. Compared to stocks, for example, that might produce dividends, very beautifully stable dividends. But with real estate, there's so many levers that you can pull to increase that cash flow. You can pay off your debt, you can add square footage, you can remodel the property, you can rent it out as a long-term rental, or make more money as a mid-term rental, or the ultimate, rent it out as a short-term rental and make even more money. There are just so many formulas within the real estate space that allow you to supercharge your income. So the cash flow, or the fruit, if you will, gets sweeter and sweeter as the years go by. Now, if debt pay down is equal to the roots of the tree, then you can think of the soil that enriches the roots as the tax benefits. Tax benefits like depreciation and taking paper losses on your property, or deductible expenses. These are tax advantages that allow you to offset the income that you make from real estate, so that you don't pay taxes on that income. And if you don't pay taxes on that income, legally of course,
Look at this thing. It's beautiful.
that means that you get to keep that money in your pocket, therefore increasing your cash flow, feeding your wealth over time. That's why I said earlier in this video that the real magic happens below the surface. This to me is the idea of growing your wealth down. Deep roots like debt pay down, tax advantages that allow you to have this tall, resilient, fruit-bearing tree. Now, whichever investment strategy you choose, whether it's stocks or real estate, none of it really matters if you are a horrible farmer slash harvester slash tree grower. I don't know if that last line's gonna make it in.
It was perfect. Perfect.
Ultimately, here's what it comes down to. A smart investor doesn't just eat the fruit. They plant the seeds for future trees. So as an investor, as early on as you can, you really want to get into the mindset of reinvesting your cash flow into future opportunities. You really want to equate buying new property to planting a new tree, because the truth is that wealth isn't just a single tree, it's a forest, made possible by reinvesting and expanding your roots over time. And by planting new seeds, you are building a legacy rooted in resilience, growth, and abundance. Because remember, real estate, especially with the grow down mindset, isn't just about cash flow. It's about building a financial foundation that can last a lifetime and beyond, ultimately creating generational wealth for you and your family. So you've seen how owning even just one rental can completely rewire your mindset and lay down deep roots for lasting wealth. But here's where things get really interesting. Once you understand this philosophy, it's really only the beginning. Because wealth doesn't just grow, but it can also explode. In my next video, I'm gonna show you why real estate has the power to make you a millionaire over time. And why, once you've tasted what it can do, you'll want to do it again and again and again. This is the formula for building wealth that will change your life. So we're gonna dive into why one rental is just the start right over here. After you like and subscribe, of course. Click. Okay.